Hi there, traders. This is Brad Gilbert with today's trading action. It's Wednesday, the 21st of February. Now, as we come out of the North American session, a couple of interesting things, right? Just having a look at the charts quickly. We're seeing the dollar just give up some gains here, right? And this is on the back of across the board, everything sort of rallied against the dollar, and it's sort of put down to basically China cut interest rates, right? And the idea is that generates a huge amount of the potential global growth from that. Okay, really ignites the Chinese economy, and then it flows in through the various channels. Now, and just look at the markets here. The US bond prices are up, which means the yields are down, right? So that leads to a lower dollar, and you can see the dollar's falling against most things. Euro, sterling, Aussie, Kiwi going up. The one strange thing is like the equities, right? US equities were down. And I'm a bit surprised at what was happening. I just had a quick look around. I didn't see too much with that, but you'd think if global growth is going to go up, equity markets would go up, but it's not the sort of case. Maybe there's a bit of like things jamming up with regards to what the Fed's doing and what's happening. To me, if China are cutting rates, it means they are in all sorts of trouble. Right? As in, they're only doing it for a specific reason. It's the first time since 2019, I think anything like this has happened. Now, okay, so there's a few things going down. Now, let's just have a look at where the action is today, right? So just connect the dots. If I just come back just quickly and look at yesterday's numbers, we're talking about the Canadian inflation numbers, right? Key number, obviously, rolls into the central bank as far as what they're doing with interest rates. Now, we did see some really weak numbers here, 2.9% versus the 3.3 and 0 versus the plus 0.4, right? So that's a weak outcome. And when we were looking at the charts here, if I just change the screen again, right, we're looking at the charts now. The dollar, this is the one thing, right? The dollar's falling against most things, but it went up against the CAD because of that CAD weakness. Now, I was sort of saying yesterday, oil can get in the way. So when we are looking at dollar CAD, there's a few options here. That's this dollar CAD there. But if I look at the crosses, there was potential here for Aussie CAD, Euro CAD. This is on weaker numbers. Now, CAD Swiss and CAD Yen. Now, to me, to get CAD Yen in play, we needed oil to fall as well, which it actually did, right? Which is a hell of a coincidence. So that turned out to be a nice trade, and I see some of our traders made some good cash off that. But from here, this is where we get the advantage as a trader, right? We know where the sentiment is in the market and where it's coming from. So when we look at today's opportunities, right, and I mentioned this on Monday, the week really revolves around dollar CAD. We've got CAD numbers coming out all over the place, and we've just got some new housing numbers as well as the Bank of Canada Gravel speaking there as well. So just keep an eye on these numbers here. We've got the FOMC minutes later on in the day, right? That could give us a bit more insight into what the Fed's thinking. But just these numbers here. Now, we had weaker inflation numbers. So what I'm thinking is we're either going to get weakness in the housing market, right? And with all the interest rate hikes and everything else, the housing markets are starting to sort of fall everywhere. And that's why China has cut rates. So maybe weaker numbers here. It means we get weaker numbers from yesterday and they hook up with weaker numbers today, right? So it's just a matter of connecting the dots here. And then you come back and go, okay, so what happens if I get weaker numbers here on dollar CAD? What's going to move from this point? So, and a lot of these instruments are a little bit in the middle of nowhere. To me, Euro CAD has broken up. Now it's come back and retraced nicely. Weaker numbers again. I think Euro CAD to me, and actually probably Sterling CAD would be the two pairs I like better. Like Aussie CAD, well, it's got a long way to go down. It will still go up as well, but I'm looking for the best technical setup that works with this number, right? If I just widen out Euro CAD there, like if you don't think the way we do technical analysis is right, well, just check out how this worked, right? So it's cut through the trend line. You'd expect it to go up, retest, and then go, right? It's stalled, and then we are here. So right now, we are at a great level to get a follow-up number, even though the housing number is like a second tier, maybe third tier number. It doesn't matter because the market's already moving. weaker CAD numbers, Euro CAD to the top side, I'd be very comfortable to get long here, and with the stop loss just back below that trend line, to me makes sense, right? Of course, at the time of the release, you need to check out what's going on across the markets, because we're like half a day out here from the numbers. So things can change picture-wise when we get closer to this. Now, once again, if we get weaker CAD numbers, CAD yen's already breaking down, we need oil to continue lower, and then we get that nice, easy move on the downside in CAD yen. If the numbers come out stronger, don't forget, it's sort of like a second tier number. It's not like the inflation numbers. It might sort of squeeze a little bit higher, but I don't see it going too far, right? The fact that we have weak CAD sentiment in the market, right? So the Aussie's rallying, Euro's rallying against the CAD, Sterling's rallying against the CAD, everything's rallying against the CAD. Because we've got that sentiment, a smaller number will have an impact if it's weaker and goes with that trend, right? That's the easiest option. If it comes out a little bit better, well, it's going to be moving down against these. Probably won't flush out the positions, but it's a harder trade. Connect the dots. Weak numbers, okay, are our friend at the moment, right? And I'd be saying the same. If these inflation numbers had come out stronger, I'll be looking for stronger numbers here. That's the easiest trade. The fact is, we did see weak inflation numbers. Now, that's going to have the market thinking about what the Bank of Canada is going to do with interest rates coming up. Tell you what, if we see a big slide in the housing market there, that's a real knock on the door of the of Bank of Canada and saying, listen, guys, China's just cut rates. Things aren't going great here. You might want to start talking about it at the very least, and that has a negative impact on the Canadian dollar. All right, so that's where I'm sort of looking at. I don't need to go sort of searching around all the majors and try and work out what's going on and say, oh, yeah, okay, Euro's higher, great, Sterling's higher, Aussie's higher. Like, yeah, there was some moves on, and that's based off more likely the Chinese cut of interest rates than anything else. The majors, well, they aren't really in the game because we don't have major US or other numbers coming out, right? Just be aware, we do have a few pelicans, okay, central bankers talking, and we do have the FOMC minutes and Bowman here as well. So these are like left field events that you can't really predict, right? So if you do manage to be in the screens and the things start moving, well, it's potentially something they've said just to stir the market up. And then you come into Thursday and we've got another leg of this with Canadian retail sales figures as well. Then we start to get some Euro numbers, right? It's a shame these Euro numbers aren't coming out today, right? On the back of the moves we've seen in the majors, because that's where we're going to get the fresh momentum. Anyway, guys, to me, still dollar CAD on the table. Just keep an eye on the markets, right? Because you want that risk sentiment to be sort of clearly in the market, so you can rest your hat on the bench there and go, you know what, this is actually what's happening, and this is why these things are going up. Because at the moment, it's a bit of a disconnection between the equities, the bonds, and the currencies. That should come into play, hopefully, during the European session. All right, guys, all the best. Good luck. Cheerio.